New Prime Minister Andy Burnham wants to give you a tax cut. Here's the problem though. The version he's reportedly looking at hands you £2.70 a week. The alternative hands you £5.10. Same cost to the Treasury though, the same £6 billion. One of these is a good headline, the other is a good policy. They are not the same thing. Some background quickly. The personal allowance, the amount you earn before income tax starts, has been stuck at £12,570 since April 2021. Had it kept pace with inflation, it would be £16,070 today. That missing £3,500 costs a basic rate taxpayer £700 a year. This is what's called fiscal drag. Wages rise, thresholds don't, and you pay more tax without anyone standing up in the Commons to announce a tax rise. In 1990, to give you an idea, there were 1.7 million higher rate taxpayers. Today, there are around 7.6 million. By 2030, it's forecast that there will be nearly 9 million. Burnham has said that threshold freezes were the thing he heard most on the doorsteps. He's not wrong that people are cross about it. The question is, what does he do next? Because there's a report out from Dan Neidle at Tax Policy Associates that says the obvious fix is the wrong one. And once you see their numbers, it's hard to unsee them. Assume the Treasury finds £6 billion. That buys roughly £500 on the personal allowance, plus a matching £500 on the national insurance threshold. What does that get you? If you earn £13,000, let's say, almost all of your income comes out of tax altogether. That's genuinely useful. If you earn £30,000, you get £140 a year. If you earn £40,000, you get £140 a year. If you earn £60,000, you get £240 a year. You notice the pattern. It's flat. The thing that makes this policy politically lovely, everyone gets something, and it's exactly the thing that makes it financially underwhelming. £2.70 a week, a coffee, and probably not a very good coffee at that. Now let's take the same £6 billion spent on a penny off employee national insurance. 8% becomes 7. £13,000 is about £4 a year. You're getting effectively nothing. £30,000, you get £175 back. On a median wage of around £39,000, you get £265 back. £50,000 and above, you get £377. The line crosses at £26,500. Below that, the allowance wins. Above it, national insurance wins and keeps winning as the income brackets move up. At the median wage, you're getting nearly double. So it's a straight trade. Help the lowest earners a bit more or help most earners a lot more. Reasonable people could land either side of that choice, except there are two more things in the report. And they're the ones that really, for me, tip it. Catch one, the marginal rate. Raising the allowance cuts the tax rate on your next pound earned for a few 100,000 people sitting in that narrow band. For everyone else, it's a cash transfer. Nice, but it changes nothing about whether working an extra shift is worth it. A penny off national insurance cuts the marginal rate for roughly 20 million people. That's the bit economists really care about, because it's the bit that changes behavior. Catch two, the accidental 67% tax rate. The personal allowance is clawed back above £100,000. Make the allowance bigger and the clawback runs longer, far enough to overlap the 45% band. The result here is that the marginal rate of 69.5% in a narrow strip at around £126,000. Nobody would design that. Nobody would even defend it. It's just mathematically silly. It is also fixable if you move the additional rate threshold too. But a Labour Chancellor raising the threshold for the highest earners is not a headline anyone is going to be writing anytime soon. There's two things worth saying now. National insurance is paid by workers, not pensioners. So an NI cut gives pensioners nothing. And pensioners obviously vote. Neidle's answer in the Tax Policy Associates piece is it's already odd for two people on the same income to pay different tax because one of them is older, and cutting NI narrows that gap rather than widening it. Whether Burnham fancies making that argument on the Today programme is quite a different matter though. And the £6 billion has to come from somewhere. Borrowing, growth, spending cuts, or another tax going up. There is no fifth alternative to those choices. The personal allowance is really the better headline, but national insurance is the better tax cut. Whether we get the better headline or the better policy, well, you've watched the budget before. The TPA's full report is linked below, and it's worth your time. Well worth having a read of. Now, subscribe to Mouthy Money News for the money stuff you need to know, because on current form, there's going to be plenty more of it. And if you're wondering where that $6 billion actually comes from, capital gains tax is one to watch. And that's something for a future video on this channel.